All right, let's get right into it. Today, we are digging into a really interesting high risk, high reward stock that's been making some noise. It's a tiny company called DVL Technology Partners, and the ticker is DVLT.
Whenever you find a microcap company playing in a super hot sector like AI, you have to ask the big question. Is this some kind of undiscovered gem? Or is it just a trap? Well, that's exactly what we're going to try to figure out today with DVLT. So, to even begin to answer that, we've got to understand what we're looking at. Let's start with the absolute basics. Who is DVLT and what do they actually do?
Okay, at its heart, DVLT is a SaaS company. That's software as a service. They're building a platform to help businesses, their boards, their leadership teams, really to help them manage the messy world of corporate governance. And their big bet? That artificial intelligence is the way to do it a whole lot better. Now, that phrase, AI governance, is super important here. And it's not what you might think. It's not just about managing the AI systems themselves. It's about using AI to make the boring, manual, but absolutely critical parts of running a business, like compliance, policy, and big decisions, way more streamlined and intelligent. So what's actually in the box? What are they selling? Well, it breaks down into four main pieces. You've got the AI tools for the executive suite. That's sold through a recurring SaaS subscription, which investors love to see. The real hook for customers, though, is the promise of automating compliance, and it's all wrapped up in a secure platform so that super sensitive conversations and documents stay safe.
And this right here? This is probably the best way to wrap your head around it. Imagine taking that old, clunky software boards use, injecting it with powerful automation for all the red tape, and then dropping a smart AI assistant on top of the whole thing. That's the pitch.
Okay, so that's what they do. But for any potential investment, the why is honestly even more important. Why does the space even matter? And what's the big problem they're trying to solve? Here's the deal. Running a company is just getting more and more complicated. Regulations are piling up everywhere you look. And the old way of managing this, with stacks of paper, a million different PDFs, and endless email chains, it's just too slow, it's not secure, and it's wildly inefficient. There's a real hunger for better digital tools. And we're not talking about a small niche market. This space for board governance software is already worth over $4 billion. And get this, it's growing at a really solid 10 to 12% every single year. So DVLT is trying to jump into a pretty big and expanding pool. But they are definitely not alone in that pool. Not by a long shot. And that brings us to the competition, which, let's be honest, is a total David versus Goliath situation. This chart tells you almost everything you need to know. On one side, you've got tiny little DVLT. And who are they up against? Well, there's Diligent, a massive private company, and NASDAQ Board Vantage, which has the entire reputation of NASDAQ behind it. Look at the trade-offs here. DVLT is trying to win on price and by being more nimble and innovative. But in the brand trust column, it's basically zero compared to these huge established players. So this is what it all boils down to. The whole thing is a battle between DVLT's agility and their laser focus on AI versus the sheer scale and rock-solid brand trust of the giants. That's the choice for customers, and it's the core of the risk for investors. Which, of course, leads us right to the main events for any investor, the bull versus bear case. Let's really weigh the potential rewards against the very, very real risks. So why would anyone get excited about this? Well, the bull case is pretty clear. You're potentially getting in on the ground floor. AI and governance is a hot combination right now. And here's a key point. These kinds of tools are incredibly sticky. Once a company starts using one, it's a huge pain to switch. If they can just get a foothold, there's a ton of room for high-margin growth, especially if they can break into industries like finance or healthcare. But, and this is a huge but, you have to look at the other side of the coin. The risks are no joke. This is a microcap stock, so you've got to be ready for wild price swings and very little trading volume. They're fighting giants, we know that. They have almost no financial history to analyze, and really, everything depends on them executing perfectly. You absolutely have to think of this less like a stock and more like a venture capital bet on a startup. Okay, so let's put all the pieces together. What's the final verdict here? And more importantly, who on earth should even be thinking about a stock like this? The consensus from the analysis is pretty direct.
If, and that's a big if, you're going to touch this, it has to be as a tiny, speculative slice of a much bigger, diversified portfolio. We're talking 1%, maybe 2%, tops. This is not, and I repeat, not a core holding.
So let's get personal. Is this right for you? Well, it might be a fit if you have a stomach for high risk, you're willing to wait 3 to 5 years to see what happens, and you really believe in this whole AI governance story. But if you're a conservative investor, if you need dividends, or if you're trying to make a quick buck, stay far, far away. This is not the one.
And that's really the question you need to leave with. After looking at the potential, the massive competition, and all the risks laid bare, does making a small, calculated 1% bet on the future of AI governance make sense for your strategy? The upside could be huge, but the risk of going to zero is real. As always, that's a decision only you can make.